Silver just jolted the market awake. In a matter of weeks, we went from quiet and ignored to how is this even happening? A rapid run, a sharp drop, and then as if nothing occurred, right back toward the highs. That type of behavior isn't normal. And today, I'm going to break down exactly what's driving it, why the coming months could get violent, and what most people will miss until it's too late. Here's the setup. When a market escapes an old reality, it stops moving the way it used to. Old rules vanish quickly. The easy indicators begin lying. And the people waiting for a comfortable pullback end up watching price leave without them. Before we jump in, quick heads up. I'm running a campaign to remove copycats and protect original work on this platform. If you gain value from these breakdowns, support me now. Hit subscribe and drop OG John AG in the comments so I can see who the real ones are. And yes, YouTube stats show most of you watching aren't subscribed. If you want more of this no fluff analysis, fix that today. Also, because this campaign is live, I opened a WhatsApp channel for the core audience. I'll post daily updates there, share short clips before public release, and add personal notes when something significant shifts. Link in the description. Subscribe there too, and stay ahead of the crowd without staring at charts all day. One more thing. If you're watching on a phone, pause and save this video. The next swing will happen fast, and you'll want a reference point handy. Here's what we're covering in this video. First, what actually happened in silver, and why the recent surge, dip, and snapback matters. Then, the one relationship that can flip silver from steady to feral almost overnight. After that, we'll connect the dots to gold, the bond market, and the policy response that can pour fuel on metals. Then, miners, why they still look mispriced and what could trigger a sudden re-rating. Finally, oil and the wider commodity complex, because the quiet market often ambushes everyone. And somewhere in the middle, I'll ask a question that might change how you position for the next 6 months. Stay with me. The answer isn't what the crowd wants to hear. Let's start with the obvious. Silver acts like it's been released from a cage. Classic pattern for most markets is simple. Run up, cool off for weeks, drift sideways, reset, then choose a direction. Silver lately, it sprints, slips, and snaps back like a spring-loaded trap. That's why normal crowd keeps getting baited. They see a fast move and scream top. Then they see a fast pullback and scream collapse. Then silver does the most disrespectful thing. Erases the pullback. What changed? The big idea. Silver isn't just a commodity, it's also money. And it's surfing two waves at once. One wave is monetary. Confidence, currency stress, hunger for hard assets, fear of debt, fear of policy mistakes, need for something that can't be printed. Second wave is industrial technology. Electrification, data centers, solar, electronics, and reality that demand can grow faster than supply for years before price reacts. Most analysts stare at industrial story only. Panels, chips, demand charts, like that's the whole movie. But when silver flips into a true monetary moment, character changes. It doesn't crawl higher. It doesn't politely trend. It lunges. Specific trigger sparks those lunges. How silver behaves relative to gold. People love ratio. I prefer thinking of it as relationship. What percentage is silver versus gold? Historically, that percentage stretches and snaps. When silver is extremely cheap relative to gold, it's like a rubber band pulled too far. It can stay stretched longer than expected until it can't. When it finally breaks the ceiling, it doesn't tiptoe. It accelerates. We've seen this before. Late 1970s into 1980. Silver already in bull trend. Then it went wild. Not up a bit. Wild. In short time, multiplied. Then 2010 into 2011. Same idea. Silver rising, frustrating bulls with slow progress, then suddenly sprinted and hit old long-term range top. Key point. Explosions didn't start because someone woke up and decided silver was cool. They started because ceiling in silver versus gold cracked. Once cracked, price behavior changed. Apply idea today. If silver stuck under multi-year ceiling versus gold finally punches through, don't expect calm grind higher. Expect new reality. In new reality, corrections shrink from months to days, not hype. Market structure. Other markets lived in long boredom, then snapped. Copper trapped decades, then broke out and repriced into different world. Lead, similar later. Moves weren't polite. Compressed, sharp, shocking. Market too long in wrong place. Catch-up isn't slow apology, comes like slap. Question, was silver trapped too long? Decades returning to same upper boundary. Other assets, metals, commodities, gold itself, kept making new highs. Gold reminds, old highs not sacred, just markers. Prior bull cycles, gold moved multiples from lows to peaks. Study cycles, once major uptrend takes hold, move bigger than public expects, can last longer than public patience. Matters, silver attached to gold psychologically, structurally. If gold building another phase, silver doesn't need miracle to go further, just permission. Permission often through relationship shift. not selling fantasy numbers, explaining market behavior when ceilings come off. Crowd says overbought. Ask overbought compared to what reality? Reality changed. Indicator didn't get memo. Usual technical playbook can become dangerous. Oscillator screams, people think it guarantees reversal. Prior silver explosions. Overbought can stick while price climbs. Indicator can keep you safe from profit, safe from move. Handle without recklessness. Separate time horizons. Holding physical or long-term positions, don't outsmart every swing. Respect volatility, don't let it shake you from structural shift. Trading leverage, options, short-term bets, timing matters. Midpoint correction can hurt, even if trend right. Explosive runs, midpoint corrections appear. Not end, pause, shake. Moment convincing story finished, then continues. Next idea, round numbers. Markets play near big clean levels. Universe doesn't care, humans do. Round numbers attract attention, orders, fear, ego, become battlefields. Stalls, fake-outs, sharp flushes at obvious levels. Silver toward major psychological milestone, nasty dip, not surprising. Trap, confused dip with death, expect old world return. Doesn't, left begging while price runs again. Question, if silver drops 10-15% in days, panic or see market clearing weak hands before next leg? Tell in comments, watching silver itself or silver versus gold. Zoom out, bigger stage, not only silver. Financial system wobbles, not politely. Quiet areas suddenly loud, long-term debt won. People think tech stocks, headlines, not bond futures. Long-term debt enormous, confidence shaky, policymakers respond, more intervention, liquidity, support. Support usually means more currency creation. Benefits, hard assets. Monetary metals move even if stock market fine. Metals dip with liquidation sometimes, recover fast, outperform while risk assets struggle. Correlation not law, mood swing. Position, don't assume stocks down, metals down. Watch stress points, debt markets, policy reactions, liquidity, confidence. Miners, leverage businesses tied to metal. Can underperform, catch up violently when market believes, move real. Compare miners to gold. Mining indexes trade in ranges relative to gold. Some eras, miners hold healthy portion. After crashes, bear markets, miners. Cheap relative to gold, market prices them as broken. Extreme lows, setup, gold strong. Miners need spark, sentiment shift, capital rotation, earnings optics. Earnings matter. Metal price rises, costs slower, margins expand. Headlines follow, ignored sector bought because numbers look good. Miners behave as second wave trade. Gold moves, silver catches fire. Miners explode as public scrambles. Warning, miners volatile. Can't handle swings, don't buy, don't act surprised. Newer or overwhelmed. Start simple, base, physical, fund, small basket. Manageable. Want upside? Layer miners carefully, calculated add-on. Experienced, share wins and comments. Help newer viewers, keep community real. Oil, quiet, outcast. Other assets moved, oil heavy, heavy too long, dangerously interesting. Cheap, unnoticed until alert. Oil depressed relative to assets, gold, stocks, even itself. Not must rise tomorrow. Candidate for surprise move. Surprise moves, no clean headline. Narrative says more supply, weaker demand, goes lower. Market makes vortex low, then turns because selling exhausted. Oil flip, commodity conversation shifts, key input cost, part of broad indexes. Commodity rally, even in messy economy. Money printed, confidence shaky, real stuff repriced. Commodity complex new leg, don't notice too late. Creative detour, silver success stories. Regular people smart positioning real results, link in description, subscribe. Main thread, silver shifted regimes. Gold relationship tell. Recovery speed tell. Correction shrink tell. Crowd forcing today into yesterday tell. Treat as normal advance. Sell too early, hesitate, chase late. Treat as structural shift. Respect volatility without bully. Cliffhanger, silver early. In new reality, next move may look chaotic. Fast spikes, drops, recoveries. Market shakes you. Comments. Bigger driver now. Monetary fear or industrial demand. One pick, metal or miners. Successful. Share win might help someone today. Final reminder, support campaign against copycats. Subscribe. Comment, OG John AG. Join WhatsApp for daily updates. Want more deep dives? Hit like, share with someone ignoring silver. Start a violent phase, early prepared watch crowd run. Next video, one signal making me cautious even in bullish setup. Know what to watch before headlines catch up.